Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. Joining us now is Bloomberg cross-asset reporter Isabel Lee. Isabel, what are you watching?
American Tower. So the stock closed higher today by 5%. The shares are up after the company reported earnings that beat expectations and gave an outlook that is seen as positive. Emily was asking, what is American Tower? And we said it's a tower. No, it's a wireless communications real estate investment trust. So
they do the tower. So it's like you have your cell phone.
Yes.
There's a data plan. That data plan comes to you thanks to the company that you pay. The company that you pay gets the towers from a company such as American Tower.
My husband's best man works there, actually.
Okay.
Anyway,
we'll have to have him on.
First quarter adjusted EBITDA was higher than estimates, as was the revenue, and the year ahead it was the same story. And overall, Wall Street really just dubbed the results as positive.
What about industrials? That's supposed to be a good stock play for this year, right? A good safety hedge?
Yes. So we have Honeywell edging higher by nearly 6%. They also raised their full year guidance for their EPS. The company plans to split into 3 separate companies, and they said they will use a multi-pronged approach to offset around $500 million in tariff exposure. We have JP Morgan saying that it's a solid quarter, though not as strong as the headline suggests. But Citi gave a nod saying raising the EPS outlook and the offsetting of the $500 million of tariff exposure reflects, quote, agile operational execution. That's my goal in life, to be called agile.
Okay, noted.
Noted. Thanks.
Take note. You guys are on the same team, so.
Yeah, we're on the same team.
Tell everybody. Pfizer, also stock that you're watching. What's going on with Pfizer?
This one also, rounding up the green on the screen, Pfizer's edging higher by more than 3%. So the company is cutting another $1.2 billion from its spending, while really it searches for the next big hit. That's after its obesity pill failed. And in an interview with Bloomberg, Pfizer said it expects to pull off 2 or 3 deals, which totals around $15 billion to replenish really their pipeline. So we know Pfizer has really struggled after their marvelous year of COVID-19 vaccine demand, but now it's been struggling. And I think they're really looking for that next one-hit wonder.
Yeah, it's hard when a company is kind of known, even to just everyday people, for, their product. I mean, there were memes online about the Pfizer. Did you get the Pfizer? And now that kind of, hype around COVID vaccines is over, they really do need to find a new drug.
You know, it's interesting that you say that, because that's kind of a good transition to Starbucks, because this is a company that's been working on shedding the image that it's had over the last few years. What's going on with shares of Starbucks, Isabel?
Post-market trading edging slightly lower by 0.3%, so their quarterly sales fell faster than expected. So this just really highlights how hard it is for the coffee chain to rework the lost ground that it lost. Honestly, when you walk around Manhattan, there's just so many coffee shops. And I love Starbucks because I come from Asia and I like the consistency, because my cafe mocha there tastes the same here. But my European friends, let's just say they're pickier with their coffee, and some love some shops, some hate some shops. But it's really tough for the company. Shares slip around 0.3% right now, and so far this year, down by 7%.
Yeah, they brought in CEO Brian Niccol, who of course was at Chipotle before that, as part of a turnaround. I guess it's too early to judge yet. It's kind of unfair to judge how
he came in the late summer, early fall is how you could characterize when he got there. More fall, more like it, but yeah, it's still early.
Okay, so we'll start assessing his performance later. But
yes, but his efforts have made headlines, like streamlining some stuff, removing a lot of frills. So you're right, remains to be seen.
The stock is down from, it's down like over 20% from highs reached just a few months ago, just February 28th. It's pretty remarkable to see. Okay, you got one more for us. We got a special edition, SMCI, shares cratering.
Yes, and if my screen is correct, it's down by 18% in post-market trading. So that's really stellar. It tumbled after giving preliminary results that fell well short of analyst estimates. Again, it's a sign that its comeback plan has been slow to gain traction. Sales were $4.5 billion to $4.6 billion. That missed analyst estimates by a lot. Earnings, excluding some items, came in at 29 cents or 31 cents. That's also lower than analysts expected. So that's really not that great news for Supermicro. And this used to be like the big company. I remember Emily and I used to cover this because at one point it was in the S&P.
It's back in
what's it really? Okay.
It's back in the S&P now. Yeah, that's what's so weird about it.
But it hasn't been for long, right? I
Yeah.
think it was added most recently last year.
Yeah, it's one of the newest additions.
Yeah. And
And then
For
it
a while-
cratered.
Yeah. For a
And then
while,
it
it was a
cratered.
small cap and a large cap at the same time.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.